in that handout.
Oh, it's right there. Okay. All right. Sorry about that. I was talking and not listening.
Page 4.
Page 4. Okay, for you all that just joined us, so that I can explain all the discussion that was going on, we were discussing the complex method by which our levy is determined and by which we know how much money we have to spend. And that's a very important part of the budget, of course, is kind of knowing how much we have to spend. And it's not as simple as just saying, well, we know exactly what that is and we'll budget to that. We don't know exactly what that is, but we give the very best estimate based on a tremendous amount of experience, particularly on the part of our finance officer, with regard to pulling together those figures. And we can talk about that later as we get through the budget, because it is important to understand how that happens. But it's a moving target. Those of us that have done the budget for a few years are familiar with that. And that it starts out with an estimate given to us by the counties based upon their appraisals and based upon what they think is going to happen in the coming year. And so that's the estimate we have to use, and we have to use it. And we can set the levy rate at any rate we want to right then, up to the point at which we are authorized by the voters. And of course, we are authorized by the voters to go to 4.0. That's
40 cents per
40 cents per.
roughly.
Yeah, 40 cents per 100, right?
Mm-hmm.
Yeah. And so that's what we've used in this case. That will change as we get more information coming from the budget, and the budget will adjust itself based upon that. But we'll get into that later. Let's call the meeting to order, and we'll have a roll call, please. I think we know all who is here. Do you have that down now?
Yeah.
Okay, we have that. Then the roll call is complete. And we have a quorum, and we now need a motion to approve the agenda that has been proposed. Is there a motion? Is there such a motion?
Here. I move.
Okay, move. Is there a second?
Second.
Okay, seconded by Michelle.
Steve.
I'm sorry.
That was Steve who seconded.
No, Steve. Okay, Steve. Okay, sorry. All those in favor say aye.
Aye.
All right, the agenda is approved. We have minutes to approve, and they're the minutes of April 1st, 2021. And hope everyone's had an opportunity to review those. And is there a motion to approve the minutes of April the 1st, 2021?
I so move.
It's been moved to approve of that.
Second.
Okay, and it's seconded. All those in favor say aye.
Aye.
Chair votes aye. Any against? Any abstentions? All right, thank you very much. We've approved the minutes of April the 1st, 2021. Let's get into the preliminary budget review. And I guess I'll ask, other than the discussion of the levy, I'll ask Steve to sort of start us off with any comments that he would like to make in the beginning.
Yeah, let me just start off in terms of process. This is the month where the Finance and Audit Committee meets twice, and they meet once today, really to do as much of a page turn or to answer as many questions as staff can about the proposed budget as it's gone through the process of, staff working on it, committees looking at it, it's been joined together, and now it's time to start looking. So no decisions will be made today, but it is an opportunity for the committee to ask questions, to help staff put together a document that ultimately, hopefully what will happen is when we bring this to the next meeting, which is the 3rd?
The 3rd of
Yes,
June.
yeah, June 3rd meeting, 10 o'clock at the North Independence Branch. We will hold the statutorily required levy hearing. And hopefully at that point, the budget will be in a position where the committee can choose to make a recommendation to the full board. So the goal today is just to go through as much of this as possible and and for staff to be able to answer any questions, clarifications, justifications, any of that between now and the June 3rd. So.
Okay, thank you. So let's start out by, I think we'll proceed on a page-by-page basis. There may be easier ways, but that I think is a way that's more thorough, and hopefully we can get through the budget quickly. I'll comment first on the budget message. It's cheeky of the chairman of the board to chairman of the committee to suggest changes to the budget message, but I guess I'm that way. So I did make a few suggestions to change the budget message. In the first paragraph, I found the first paragraph slightly confusing, and so I suggested to Steve some changes to that. And I won't go through all of those right now, but I think that he agrees that it's an improvement, and we'll make the changes that.
Can you present what you thought need to be changed?
Pardon?
Can you mention what your changes are?
Sure. The beginning is that the 2021 year has been one none of us quickly will quickly forget. So I removed one word there. Then it caused considerable disruption in every aspect of life, including the operations of the public library. And then I struck out the next sentence, which is Mid-Continent Public Library spent more on sanitizer, bed masks, and so forth. It's just a matter of making a sentence that I think says what was intended. And so what it says now is that the second sentence now would read, yet we have found ways to provide provide significant service with significant service with safety for our patrons and employees alike. And then toward the end of that paragraph, there is one other sentence which has some changes in it, and the changes to that read as follows: the opportunity to pause services has given us unique opportunities. The great challenge in the coming year will be returning to a new normal in which incorporates lessons learned during the pandemic. Now, to me, all of that says exactly what Steve was suggesting, just a slight improvement in that, and that will be incorporated in the next budget message that you see when the draft comes out. So you can make further changes in it if you'd like, or you can make further changes now. Those are really the only changes that I suggested in the budget message. And so it just seems to me that's a little bit better start. So any questions or suggestions, further suggestions on the budget message?
John, I have a couple of comments on the top of the second page when we talk about capital projects. I know we mentioned later on in the document how appreciative we are of Prop L, and Prop L's given us the opportunity to do all this stuff. It seems to me that in Steve's message as the library director and CEO that a little paragraph or a small sentence should also say, because of your support of overwhelming support of Prop L, we're able to do all this stuff and show his appreciation. I don't have exact wordings, but just that's kind of the flavor. And then at the end of the second to last paragraph, one of the things that Steve has said over and over again to us throughout the last year and a half is how appreciative and supportive his staff has been through all these changes. It seems to me that this would be a good time for the library director to pat his staff on the back in a public forum and thank them for their efforts. And because of their efforts, we're hopefully going to get back to normal soon. Fiscally, we've been able to manage our budget appropriately. And so kind of a thank you to your senior staff, your field staff, and finally say something about, without further ado, we're ready to welcome back all of our patrons to the library. So kind of ended on a hope message, but in the process, give kudos to our staff for bringing us to the point of where we ended the year in pretty good shape.
Okay, if I gathered those suggestions, basically they are to make a mention of Proposition L, as we have done many times before, thanking the voters for the confidence that they gave to provide the funds there. And I think the total, the average rate was 62% yes vote on that, and that was a wonderful sign for us to move forward on the capital program. And so that's it. If you could find a place even there to properly mention that, that would be helpful. And then thanks to the staff. We all thank the staff. We wouldn't be here if it weren't for a staff that was willing to take this on at some risk to themselves in order to provide the service that we owe to the public. And we're grateful for that, and we'll always be grateful for that. And it would be a nice opportunity to say that in another way.
Got it.
Okay. Steve, did that cover it? Steve Rowling, did that cover your thoughts?
I'm sorry, I put myself on mute. I would end it on a somewhat hopeful note that our doors are open and we're ready to see everybody back.
Okay. Those are good suggestions. Any others? Michelle?
No, I thought those all sound fantastic. I know we were excited to be able to go back in the other day. So I know other people are.
Yeah. Okay, let's move on to the next page, which is page 3, strategic plan. I mean, we've seen most of this before, but it's always important to remember that this is not happening in a vacuum. All the decisions that we make, we're trying to make decisions, including the budget decisions that relate to what our strategic plan is, which has been carefully developed over the last many years, and we wanted to repeat what that consists of. I don't think that there is any new material here. Is there, Steve?
Yeah, let me check with, I don't think we made any changes, but pages 3 through 5. I think that's the exact same thing that we've had. Because it really is just a restatement of the strategic plan, who's responsible for what.
Yeah, and I sort of underlined the phrase performance metrics and inputs, because that's one of the things that's changed about the way we do business, is that we measure what we're doing. We have a strategic plan and we decide on measurements of whether we're achieving it or not. And those measurements guide us. And that's what Katrina does for us. Not solely, but she leads that effort, and that's been very important to us to have that measurement so that we know if we're making progress. Okay, any other questions about that? On the next page is the strategic priorities and sort of a chart that I believe I don't think there's any change in this chart either from previous times. And this came as an idea from the board concerning giving a better picture in graphic form of how we're proceeding, and this is the result of that, and so it's continued on in this budget message. So executing the strategic plan is the next page, and that's on page 5, and you see there, I don't believe there's been any change there either from the previous year budget, right? This is just a way of showing how we proceed to execute the strategic plan. And then the budget structure is very interesting, several pages. I'll ask if there are any major changes there. I did not see any, but there may have been some changes. We're talking about many different ways of cutting up the budget so that we can better understand where the funds are going. One of them is by the funds themselves, which is a sort of an accounting matter. And the major funds are general fund, capital and project fund, debt service fund, and special revenue funds. And those are the same as they have been previously, correct?
John, two small changes we made in that section. The first one is on page 6, right in the middle, under the special revenue funds. We do not have Greater Kansas City Community Foundation's account anymore.
Oh, okay.
So we only have Truman under the special revenue funds.
Yeah, so the board voted to drop the Kansas City community
About a year ago, yes.
about a year ago, right? So that previously was shown there, and at the board's decision, that's been dropped.
Yes.
I think it was dropped because it was originally undertaken because we were beginning a fundraising activity, and we felt that being a member of this major community foundation would be helpful to our fundraising, would give people an option that they could give to us through that if they wanted to. Very little of that actually happened, and the cost of maintaining an account there kept rising. So that was reported to the board, and the board decided to cancel our agreement with.
Correct.
Yeah,
that's it.
Right?
That's, what was the other change?
And the other change is on page 9 at the very bottom, under the budget calendar. In the past, we always submitted calculation to the state in August. But Jackson County has changed the date of submitting the final assessment to us. It will be very late in September.
In September.
So
Okay.
that's why we changed it to the month of September to submit our calculation to the state auditor's office.
Hi, Quan.
Yes.
So if Jackson County's submitting in September, we get to wait till the end of September, like the 30th or thereabouts?
Most of the time, there's no exact date.
Okay,
For the past 2 years, we received in between the September 15th and the September 20th. And we just have, a couple of days to submit the paperwork after we received that. It wasn't an issue 2 years ago, but we had some issue last year because of the rollback and because the final assessment was significantly different than the initial assessment for
Okay.
Jackson County. Yeah.
wow. Was it up or down?
It was revised down with a new construction number changed.
Okay.
Yeah.
And the other counties, they are planning to submit in August as usual, or is it not
The other 2 counties, usually we get in July,
in July?
late July.
Okay.
Yeah.
Okay, this is probably as good a time as any to just ask Steve to give us, and Quan, to give us a quick tutorial on how the levy is set, because I think that's a matter, particularly for newer members of the board, that can be and is understandably confusing, because it is a confusing process. So would you just walk us through that?
And Quan, feel free to jump in at any point, but I think the best place to use sort of as a roadmap, if you want to have something in front of you, is that budget calendar that's on page 9. And so, so the way that this typically happens is, basically what's saying in March is that Quan is gathering all the information. And then in April, it's actually April 1st, and this is reflected in the March board meeting, we do set, the board sets that non-binding tax levy. And the non-binding tax levy is it's a prescriptive thing. It's something that the state of Missouri requires us to do. It's always been our practice to set that non-binding levy at the voted maximum, because we have no idea how the calculations are going to come, because they haven't given us one calculation yet for the current year, even though they're asking us to set a non-binding levy rate. So we set it at the maximum, and every year that we've done this so far, I don't know that we've ever actually levied the maximum, but basically what we do is we're telling people this is sort of the maximum of what your taxes could be. And then as we get more information, we actually calculate it. So then we propose the budget, which is kind of the point that we're at right now. And then as of June 30th, we are required, as it says here in section 182-645, we are required to have the final annual budget approved by the library board. But it's also during this time period, like Quan was saying, that in July, we get the final, late June, early July, we start getting the final, or some of the assessment information from Clay and Platte County. And then we typically don't get the final assessed information from Jackson County until August. So once we start getting that, because that's how we figure all of this out. We get the assessed valuation of the personal property, the real property, the commercial property versus the residential property, put all of that together. It's calculated at the taxable rate, which I always forget the percentages, but you're not, if you have $100,000 home, you don't pay $100,000 in taxes. What's the commercial rate? Is it 20?
Yeah, 20. It depends on agricultural or
Right.
commercial. Yeah, it's anywhere between 19% and 25 to 30. Yeah.
The 30, yeah, depending upon, so that becomes your taxable rate. And then, and we get all of that by the end of, like Quan was saying, by the end of August or so. So where this becomes tricky though is again, by August is when we finally get the numbers that we can plug in to calculate what our levy rate's supposed to be. But on June 30th, we are required by law to have our budget done. And so how do you do that? And so the best way that we can do it is estimate. And, the 3 years that I did the budget and all the years since, I've become okay at budgeting what our revenue is. Quan's been doing this for closer to 15 years, approaching 20 years. He's actually even a little better at the estimating than I am. And so what we do is we get our best guess and our best estimate, knowing that we don't have a complete picture. We do our budget and submit our budget because that's what the law requires. And then we go back and certify. Now, the thing is that we do all of the budgeting based on our voted maximum, because that's the way it works in Missouri. You can't, governmental entities cannot raise taxes without the vote of the people. And so we went to the people in 2016 and said, here's our vision for library service. If you approve of this vision, please vote yes, and you will give us these revenues. And that's what happened in 2016. The people said, we will fund this up to 40 cents per 100 assessed valuation. We can't go in and say, okay, we want it to be 45 now. It's illegal. That Hancock Amendment prevents that from occurring. On the other hand, the other thing is the Hancock Amendment also, which this is the form that Quan uses. He puts in all of the property values, the assessed valuations, runs the calculation sheet, which is about a 5-page long calculation. That after we run that, if there is inflationary growth, or if if the assessed valuation of the property has increased significantly county to county, mostly through inflation, but or it could be through just excessive valuation. So say all of a sudden oil is discovered in greater Kansas City and all of our property values shoot up significantly, then what would end up happening is there would be what's known as a Hancock rollback. And so what they would say is that, your property used to be worth 100,000, now it's worth 500,000 because there's oil underneath it. And so the taxes now are going to go down from 35 cents to 32 cents or whatever it might be, so that we can only, we're only allowed to, what's the maximum that we're allowed to increase?
5% or CPI, whichever is lower.
Per year?
5% or
Per year.
CPI, whichever is lower.
Right, 5% or CPI, whichever is lower per year. And that's again, written in the law. So typically what we do is that if things are increasing marginally, we tend to go along with that, but we don't necessarily, because everything increases in price. I mean, books increase in price, health insurance increases in price, people's homes increase in price, and so everything just sort of floats up together. But we can't get a windfall from that. That's the whole purpose of the Hancock Amendment. And that's what you see in our budget is that, even though the public approved, we asked when we went to the polls, Proposition L asked for a 40-cent levy. We have never actually collected a 40-cent levy, even though that's what the public approved.
And we're very
Because-
likely to do that this year.
This year or next year or anytime in the next couple of years would be my guess. In fact, we've dropped almost 3 full cents, I think, in terms of our levy amount, or levy rate,
How did you drop?
because of the calculation. It's because of the property values have
So
increased.
this is not anything we did. This is just the way the numbers are running.
Right.
We don't have any control basically over the mill rate.
Well, we do. I mean, we can take a voluntary rollback. I mean, we could choose to just go in and say that the people said we want library services at 40 cents, but we're not going to listen to you, and we're going to do it, and we're going to voluntarily.
People who voted not necessarily are property taxpayers. There's a lot of people, you don't know the percentage of property taxpayers versus renters versus whoever else is out there.
There's a lot. I mean,
There's a lot of renters.
well, but renters pay.
They
They pay personal property tax. For
Yeah.
their cars and things.
Yeah, I
like
understand,
that.
but I'm just saying, do we have any ability to roll this back?
We do, but there's a couple of problems. I mean, one thing that happens with a voluntary tax rollback is that,
A minimal, just like 1/100 of a penny or something.
well, one problem with a voluntary tax rollback is you can't do it that way. You have to actually say what the amount's going to be. So it's not 1/100 of a penny, it would be 0.625 or whatever. And whenever you voluntarily do that, that becomes your new ceiling, which means you can never roll back up. Yeah, I mean,
Not the .40?
not the 0.40.
Really?
Yes.
Holy moly.
So that's one of the reasons it is not attractive for people to do voluntary rollbacks unless you know for certain that you are never going to need that revenue. And I can't say that we're never going to need that revenue, number one. And number two, the
You don't want to
public
give,
told us that
you
they
don't want
wanted that.
to, you don't want to give away your money.
Well, and the public told us that we said, we will provide this level of service for you if you're willing to pay for this level of service. And they said yes. And so now for us to go back and say, we don't believe you and we're going to do what we want to anyway, that's not following the will of the people. And so I've got a little bit of a problem with that. Now, I understand 38% voted no, but 62% voted yes. And we are obligated to at least do what we said we were going to do in the election. And we're not done. We're not done with that yet. We're not finished with our buildings. We're not finished building out our services. We're not.
Oh, no, you're not anywhere near.
We haven't made, and once we're finished building out our buildings, we haven't finished paying our debt.
Yeah, you got to pay your debt.
So yeah, I mean, it's not like we're sitting on bags of money. I mean, we have a reason for the levy that we're raising, but, you know, in the time that I've worked here, the time Quan's worked here, the time Dick Wilding was here, the previous business manager, you know, we've always submitted a balanced budget. We've always adhered to conservative budgeting, and always tried to do our best to provide the maximum amount of service, without, you know, just doing it because we can.
I think we're a victim of our own success. You've got gorgeous, beautiful
Perhaps.
buildings. You've got the Midwest Genealogy Center. You've got the Withers Group.
Sure.
And the perspective of the public may not be as generous as we hope it is, because there's a lot of unhappiness right now on homeless people, a lot of chat rooms talking. We just have to be careful about our public image and not look like Porky Pig. That's all I'm thinking.
No, I understand, but, you know,
Well, and the public, I mean, the public knew what they were voting for.
That was 5 years ago. Things change very quickly.
But they knew what they were voting for at that time, and we should.
I'm not against the vote. I'm just.
Over a 6-year period of time, we told them, and we will do this. If you vote for it, we will get this done in 6 years. So you don't have to wait around for the next 20 years to see these improvements in the library. And there was a lot of work that went into going to the public in small groups and in larger groups over a period of a year to show them exactly what it was we were going to do, even drawings of things of what we were going to do. And they said, hey, that looks pretty good to us. And so they voted for it. And we're carrying that out, and we're telling them every year what we're doing to carry out their wishes. And so far, I mean, in my own case, what I'm hearing is bravo. You know, it's great. What you said, what you're going to do, and you're doing it, and that's what we wanted. And we're having a wonderful. I mean, our library system is incredibly good and getting better. So.
And last year was a challenge. There's no doubt about that. But I think one of the things that we've worked really hard to do is to make sure that we're following what we promised the public that we would do, and that we're not doing it in an excessive way. That you know, the opinion and the will of the people do go both directions. I think you said an interesting thing, Charlotte, that we might be a victim of our own success. There certainly could be some truth to that, but certainly if the vision of libraries was, we don't want a world-class library, we don't want, you know, state-of-the-art libraries. What we want is a warehouse where you can come and check out books. There was an opportunity for that to be the will of the people, number one. Number two, when you look at things like our benchmark statistics, like our net promoter scores hovering around 90%, you know, Apple doesn't even have a 90% net promoter score. Again, this is a situation that if people were, I'm not saying that there aren't some people who are upset. There's always going to be some people who are upset, and there's always going to be some people who are going to be thrilled. But if our net promoter score, which essentially is saying the people who use our library, you know, that the vast, overwhelming majority of them are willing to recommend the library to their friends. Like I said, Apple doesn't even have a 90 score or an 89 score. I think we're hovering around 89 right now because of the pandemic. Again, if it were a situation where our net promoter score was 50, where our net promoter score was 20, then we'd have to be saying, we got to do something different because people are upset. But that's not what the data is telling us. Again, understanding not everyone's going to be happy all the time. But so that's the process. And it is a little bit of a tough process because in order for us to do everything we need to do in order to make the statutory guidelines, we have to tell everybody how we're going to spend the money without it actually knowing what the money is going to be.
Well, if you cannot,
That's hard.
you cannot do a voluntary reduction, because the law changes and you were locked in at the new level, I would say you have very, very little control over the levy.
Well, there is some limitation to, so you can do a voluntary reduction in certain years where it's not subject to that, but most of the time it's subject to locking it in permanently. So if we rolled it back 1 penny, just for example, let's just say we rolled it back 1 penny because we didn't need the money this year. But next year we need to do carpeting for 3 libraries and we're going to need that penny back. In order to get the penny back, we're going to have to go to the voters,
Oh.
hold an election, which will probably cost around, based on the election cost for the last election, around $800,000 in order to get that penny back.
Oh, it's
So
not-
that's,
We've got debt out the nose. We've got to take care of our
we've
debt.
got to take care of the debt too. And so having that flexibility to be able to roll back up.
I would say this is a
That
debt
revenue.
issue, because if we need to pay our debt, we need to keep the doors open and the lights on. So I had a lot of questions, but if you are unable to roll this back voluntarily and recapture in a later time, this is not an issue.
That is my perspective.
Yeah, this is not an issue.
Okay, perfect. I'm not trying to be rude at all. I am gonna have to jump off at like 11:45 or 11:30 for a call. So can we move on from this topic?
Michelle, can I ask a favor? Did you, before you leave, do you have anything that's pressing that you want to make sure that you point out in the draft budget?
Not right now. I'm still
Okay.
going through it. But
Okay. If something comes up after you hang up or something comes up in the next couple of days, please drop a message to me
Well, I mean,
or John or
I
Sean.
will. I mean, I still
Okay.
got a good 45 minutes to possibly an hour before I've got another call, but
All right.
we're kind of, I feel like on this issue, I hate to say, I feel like we're kind of beating a dead horse because there's really nothing that we can do.
Apparently.
Okay, well, let's, one thing we know for sure is that that when the budget's done, when we receive all of our estimates, we're not going to have the estimated rate will not stand. It'll be less than
Most probably.
most probably it will be less than, it has been every year for the last.
It'll certainly be less than 40 cents, and it may be less than the amount that Quan and I calculated on based on last year's levy.
What was your calculation?
Last year's calculation was
3696.
36.96.
It's in here. So do you think it might be less than that?
It may be.
Maybe?
Could be,
It may be.
we just don't know yet.
We just don't know. Yeah.
Okay, let's move forward and we will go to
I think page 10 is for.
page 10, page 11, yeah, page 10. Anything on page 10?
Just a couple of things not on 10, on 11, we need to make below the table, it says the library has reciprocity agreements with, we need to add St. Joe Public and Henry County. We approved those this last year.
Oh, okay.
So we'll make that addition.
The other thing I suggested in this area to Steve was that this is a real good opportunity to do sort of an advertisement for our virtual branch. It's my belief that based on just personal contact with a number of individuals that we still not enough knowledge about our virtual branch, which is incredibly powerful. And we need to do everything we possibly can to make sure that people understand so that they will use it and benefit from it.
Is there part of the organization and structure section that has anything about the virtual branch in it?
Not as much as there should be. So
That is where I go every day. It's
Yeah.
amazing. We need to put that in there.
I think, maybe after the list of physical branches, we might add that, and something maybe starting off in 1995, Mid-Continent launched its first website, which eventually will become its virtual branch, and then talk about details and, how many millions of people have gone there, and that, we spend more on licensing digital resources than any other library in the country. Yeah, I mean,
That's very big.
we'll add that.
Yeah, okay, and there is I can't remember where, but further on in the budget, there is an explanation of the virtual.
There was a technology budget.
In the technology
Yes.
projects, right?
Yeah.
So under technology, it's further explained about that, but I think it's so important that it needs to be also referenced at this stage.
In this forward material.
Yeah.
We can do that.
Steve, should we mention something about our agreement with Kansas City Public and Wyandotte County, Johnson County Libraries?
Yeah, actually, that's in that same paragraph.
Yeah.
So where it says, so there's the initial paragraph where it talks about the reciprocal agreements, and then next it says reciprocity is also extended to customer serviced serviced by any public library that delivers service and belongs to the Mid-America Library Alliance, and that borders MCPL. So that's Johnson County Library. And actually, the Kansas City Public Library is listed. It's not listed, but it should be listed in that, because we do actually have a separate reciprocity agreement with KCPL. So yeah, we'll get that whole paragraph cleaned up, Steve.
Okay, thank you.
Yeah, it'd be important to know that because, and the addition of these two, I'm not sure I was aware that had happened. So it's good to know that we have that. That's good for our patrons and certainly good for theirs.
Mm-hmm.
Okay, let's see. We actually all the way to we're on page 12, I guess is the next page, and I think we talked about some changes there that would be helpful, and we'll move on. That's the map that we normally and nothing is really changed too much on the map.
Added East Lee Summit.
Yeah.
Actually, I think we added that last year, but we have East Lee Summit in there as our new unit of service.
Yeah, okay, so that's our branches throughout the 3-county area. And then sort of very key is the next page, which is page 16 I'm on now. Did I skip a page there? Yes, I did. The organization chart, which there really is no change there from last year's budget. Is that correct?
Correct.
Any questions about that? Steve and I were discussing a little bit before this how the organization chart looked 16 years ago. It was quite a little bit different. The span of control was the director of the library, and there were like 700 people reporting directly to the director of the library. There weren't many people in between the director of the library and the rest. So we've come quite a way, you know, as a large organization as we are. We're doing such a much better job of running the organization effectively and efficiently than we were back in that time. That's been a long time coming, but it's here. The budget summary, anybody stop me if they want to discuss any other part of that, but we're on page 16 now, the budget summary.
Yeah, let me explain what this is, because this is a little different. So everything that you see in the budget essentially is a line item budget where we do accounts and line items. And so what Quan and I have done on page 16 and 17 is actually we've created oh, I'm sorry, I jumped the gun. I was getting ready to talk about 18 and 19, so.
Yeah, okay.
I'm sorry.
So this is
Just the summary, it's the balance sheet.
This is a summary and balance sheet of the entire thing. Any questions or comments about that? Anything you want to say about it, Quan or Steve?
So this is the budget that we're proposing, $73 million budget, is that what we're saying?
No, I'm sorry. The total amount of the budget, including capital project and all other funds, is right in the middle, $98.4 million. And the total expenditure lines.
Budget, that's all expenditures, correct?
The number you saw at the top, that's the beginning fund balance
Okay, so the budget is this thing, this is 98 million,
Yes,
all this, okay.
yes,
Our
everything.
income's going to be what, 55 to 65 million?
The operating fund is $56
Okay,
million.
so this must include things that aren't in the income this year, is that correct?
No, not this year, the new fiscal year.
Okay, whatever.
Yeah, so if you look at each column, so there's the general fund, which essentially is our single year's operation. And that's the first column. And then the next column is the capital projects fund, which a large chunk of the revenue there was from the certificates of participation bonds and carry over year over year. And actually, that's true of all the rest of the columns. So the grant and gift fund is funded through money that comes in independent of tax revenue and can come in 3 years ago, 2 years ago, 1 year ago. Debt service fund is an internal service fund. The Leather Scholarship Fund, again, it's an independent scholarship fund, has nothing to do with current revenues. Endowment fund, community foundation fund, none of those have anything to do with current year revenues or current tax revenues.
So we're looking at 61 million in tax revenues and about another 37 million.
Well, revenue,
Well, that's what we have carryover for. We have, carryover in the general fund, which is required for us to get from one part of the year to the next without.
But our income says up here 61.6.
That's the total property tax revenue.
That's property tax.
That's property tax, right? But what's inflating that figure, if you want to look at it that way, the $98 million figure is the fact that we have such large balances. We have a large balance in the general fund, which is we have to have that in order to operate without
Not a problem.
making cash loans. The other part of it is the capital project fund itself. We haven't completed the capital work that we've done, and the money that we have to do that capital work still exists and is invested and still earning interest, but it shows up as a very large carryover in the capital project fund because we haven't finished what we set out to do. But by the end of next year, when we're doing the next year's budget, we'll see that that's gone down significantly. And so the others are the same way. That's the biggest one right there is the capital project. Okay. Again, lots of things, lots of ways here trying to look at the budget so that people can look at it and see and see it in different ways that are important to them. So on page 17 is the breakdown for things that are more measurable with regard to other library systems, which is one of the things we've tried to do, and that is to measure how much we spend in relation to other library systems of our size across the country. A big library system, we don't think of that way so much, but we're one of the largest library systems in the United States, and it's useful to keep that in mind. But this is a breakdown of the materials, and later on, I can't remember a comparison chart that shows how we relate in materials and personnel and in other expenditures, major expenditure categories to other libraries around the country. We'll get to that eventually.
and 17 and 18 is where I kind of jumped the gun. So this section is really a different way. It's the exact same budget, but it's a different way of presenting the budget as opposed to looking at it as individual line items like we will from this point on. What it's doing is it's looking at how much money do we spend on material lending and how much money do we spend on programming and services, how much on public technology and how much on our buildings and public space, as opposed to how much do we spend on office supplies or how much do we spend on paying our gas bill, which is what you do on a line item budget. So when you do that, it's a different way it's just a different way of looking at it. The other way that we use this right now is, how do we allocate our staff? certainly a indictment that you hear against school districts is that there's too many administrators and not enough classroom teachers and things like that. But I'll show you a little bit further on in the budget that when you start looking at support services include everyone from like me and Quan all the way down to our delivery drivers and people like that, that we have a very small allocation of that relative to our boots on the ground, if you will.
And an important thing about this is that we're able to compare it with other libraries. These are common breakdowns that all libraries look at, and we're therefore, by breaking it down this way, we are able to compare ourselves to other libraries, and then that gives everybody, us and the public and so on, the opportunity to judge, well, how do we stack up in terms of the materials that we buy, the programming that we do, our amount of technology emphasis, and so forth. So that it's a useful way to look at the budget aside from line by line. Okay, let's move on to the total budget by programs.
John, I have a comment on page 20, if I could.
Yes, please do.
I think page 20 is so important. 9 years in a row being given this certificate of achievement. Steve, is 9 years, is that common among groups who get this?
I can't speak to that. I'll have to yield to Quan, but actually it's 10 years now. We just found out last week that we received it for this last year. So
It seems to me, if we're doing a budget, that telling our patrons and telling the folks who give us the money at the county level that for 10 years in a row we've received a certificate of achievement from the people who look at this stuff and say, you guys are doing a hell of a job. That seems to me to be something we ought to put pretty far up in front and let people know that we're not just some ragtag library system. We're one of the best in the world, in the country. And I don't know if 10 years, if there's 8% of the people who get it 10 years in a row or 5% of the people, but it seems to me that this is a good housekeeping seal of approval that we're pretty damn good at this stuff. And I think we ought to, without being presumptuous and braggadocious, but just point out that we know what the shit we're doing and we're doing it well. And I think that should give people comfort, knowing that we're not wasting money, we're spending it wisely, and people who look at this around the country are saying Mid-Continent is one of the best in the country.
Yes, thank you for that comment. John, is that, how many people get this? Does everybody get this?
No, I can say not many public libraries receiving that.
So this is,
Most of the recipients are either state or city government, the general purpose government, not many special purpose government entities.
so not all libraries would be so honored.
Very few,
every year.
yes.
Yeah.
Yeah.
Okay, thank you for bringing that up, Steve.
So do you by chance know how many of these are handed out a year?
No,
Just out of curiosity.
we have maybe 30,000 government entities in the organization. My guessing is about 10% maybe. Yeah.
So there's 30,000 governmental entities that's part of GFO.
Part of GFOA, yes.
And so not all governmental entities, like for example, my guess is the city of Levacy probably isn't a member of GFOA, for example, just too small. So 30,000 and then Quan saying about 3,000 of those 30,000, which is not the whole universe of all governmental entities.
For government to receive that certificate, first you have to prepare a so-called comprehensive annual financial report. Not all government do that.
Got it.
For example, like Clay County does not prepare a comprehensive annual financial report.
Clay County itself.
After you prepare that report, then you can apply for the certification.
Wow.
Does Platte County? I was just out of curiosity. Do you know?
Clay County, yes.
They do a CAFR?
Thank you.
You're welcome.
Yeah, and the word CAFR
Comprehensive.
always puzzled me until I finally figured it out. And it might be good after Library's Comprehensive Annual Financial Report on page 20, if you just put parentheses CAFR, so that when it's referred to otherwise, people will make the connection. Okay, general fund, detailed statement of revenues and expenditures. Any particular comments there? I'll just start out with just one. This is almost an annual comment of mine, and that is, it seems like we're low on tuition reimbursement. If I were, employee of the library, it seems like I'd be rushing out to take advantage of that and do tuition reimbursement. And I always wonder why it's not more used than it appears to be. We've estimated that we'll only have to spend $30,000. We'd like to spend a lot more because it would mean that our employees are improving themselves educationally and that we're helping them with that. So, any comments about that?
Well, I mean, certainly this is one of those situations where we are budgeting to utilization. So yeah, you're right. The budget for 2021 is $30,000. If you look back to 1920, we spent 21,000, estimated to spend 22,000 this year. And so, there are a couple of limitations into how the tuition reimbursement program works. That certain eligibilities. So you can't use tuition reimbursement to go to the Kansas City Art Institute, for example. I mean, that it usually has to be in some way associated with a certification that you're getting for work-related activities, or a degree that you're working on for work-related activities. There is we are constantly debunking the myth that this is only for library science. It's not. Although it says library science in the policy, really almost any degree program that you're working on that can help you fulfill your job. I used the tuition reimbursement program for my master's in public administration, for example, many, many years ago. It's my feeling is that what's going to end up happening is that as we have right-sized our HR department and our benefits department, this will probably start getting used a lot better because we've got more people who are focusing on getting the word out on how you can go about using it. But yeah, I mean, theoretically, some of Quan's staff that work on HVAC certification, those certification classes can go through tuition reimbursement. There's a lot of different.
And if there's a young person in the employ of the library in any capacity that believes that they would like to get a master's in library science and become a librarian, can they do that with tuition reimbursement?
I mean, there are some limitations, but yeah, I mean, generally speaking, if somebody's identified that that's what they want to do, we can help them by using that program. So,
well, just speaking as one member, I would find it helpful if we could get some suggestions, perhaps, about if there's any changes required in board action. I would like for us to have some suggestions there of how we could make this more available to people, because it seems like it's to our advantage to make it more available to people.
I'll ask the HR director, Jennifer, to work on this and bring things through the personnel committee.
I've got a question on payroll. When you have full-time equivalents, you have your payroll. Is everything else a percentage based on full-time equivalents? How do you come up with your numbers, or is it historical data, or is it a combination?
Most of it's formulas. And so if you remember back to the personnel, when the personnel committee brought their recommendation to the full board, we had that big spreadsheet that said, based on this many FTE, this is how much we have to pay for Social Security. So it's mostly formula.
Just one other comment on this page 21. The employee assistance program, I notice also that has a fairly minor expenditure, and with the number, how many employees do we have total now, full-time?
Oh, gosh, I don't know full-time off the top of my head.
The 364.5 FTEs, right?
That's FTE, yeah. And total head is around 700. So that's going to be full-time, half-time, hourly, and all of that. So.
And are part-time employees eligible for the assistance program?
Yes, and their families.
Okay, I would expect, based on everything that you're hearing now coming out of the pandemic, that would be a more desirable program, or not a desirable program, one that would be more used than historically because of issues of isolation and so on that we hear so much about coming out of the pandemic. So I just, would like for you to review that a little bit in light of that probability and see if there's not some room for guessing an expansion of that will take place.
On the general fund at the bottom, the payroll books, electronic books, are these the real numbers that we're using for, that reflect what's happening for this next year?
Yes.
So you've got 12 million in materials. That's not very much. Is that normal?
Yeah, it's actually higher than, it's almost higher than the ratio of any other library in the United States.
Yeah. Yeah, that's one of the important things to keep in mind is that in that category particularly, we've always been higher than institutions of our size all over the country.
Steve, could I ask a question about the grants and contributions? It's about half of what we actually got in 19 and 20. Did we get, why is that?
Quan, why?
Grants and a contribution.
Thank you. Yeah.
If you look at the first one, the governmental grants, majority of that is the E-rate, the funding, the reimbursement for the telecommunications. We have a new contract with AT&T, the cost is lower, so the funding will be lower too. And the private grant and the contributions, most of them will be recorded under the gift grant fund, not general fund here. So the majority of that part will be later on the budget.
Yeah. So some of this, Steve, that what you're seeing back in 1920 was recorded here, but is now recorded under grants, under Fund 16. And so that's where part of that gap is. But the bigger part is what Quan was talking about, because our telecommunication rates went down, we contracted more favorable terms, our reimbursement went down.
Yeah, and you might just mention E-rate and what that means.
So that's the federal telecommunications, that's the USAC, the Universal Service Fund. So anytime you look at any phone bill, whether it's a cell phone or you still have a landline, you'll see that there's a charge there for the Universal Service Fund. It helps fund telephones for low-income families and senior citizens, and for schools and for libraries, and access for schools and libraries. And so it is based on the free and reduced lunch eligibility of the school districts within the library district, which is kind of interesting in terms of calculations. But that's where that comes from. And it significantly offsets our technology costs.
Hey, Steve.
Doesn't pay for all of them. Oh, Brian, yeah.
Steve, actually, for us, we actually cannot claim our phones or our cell phones or anything like that on E-rate anymore. It's strictly applied to internet and Wi-Fi services. That's it. So that may be another reason why we're seeing a small reduction in that also, because we can't claim those, like all of our phones on our desk and our cell phone services and hotspots that our staff uses. We can't claim any of that on E-rate now. So
right. That used to be an eligible service, and it's no longer an eligible service.
That's correct.
And what about the hotspots that are possible through the foundation now?
Yeah, those aren't eligible.
Those aren't. Those aren't.
Seems like they would be, it seems like.
Yeah, the hotspots are in a weird spot because they use a cellular service. And so that's classified as a cellular device, like a phone. So yeah, it's actually not something we could claim on there. So.
Okay. All right. We are, I believe, page 22. Any further comments or questions related to that?
No, so just to clarify what you're looking at, page 21 and 22 is actually the individual line items. If we were to rip everything out of the budget, this page, the page 21 and 22, is essentially the individual line items for the operating fund. This is sort of the meat and potatoes of the budget. Everything else is a lot of explanation for either the operating fund or the other funds. Important, but this is sort of like boiling it all the way down to the most basic.
This is the one
Yeah.
that the accountants more likely pay attention to. Is that correct?
Well, or the library director. I mean, every time that Quan gives me the monthly status report, I'll pull this out and see where are we in terms of where we said we were going to be. I mean, this is the page that I use. So.
How much time do you spend on money and budgets during your workday?
Do I not? That's why I have him.
He doesn't?
Yeah. I
He
mean,
just go do other stuff?
and then Quan will.
I gave you the orange bag every month.
You get the orange bag every month, right? And the orange bag has all the stuff that I have to review, and that doesn't take me very long. But no, I mean that's the advantage of having really good staff. I mean, he can keep his eye on stuff and say, hey, look at this, keep watching this, and that's what I do. So, Steve, it sounded like you were going to ask something.
Yeah, on contracted services, we go from 1.1 to 1.8 million. Are we doing something different, or is that just the new buildings?
The
Contracted services.
Yes, the cleaning service is part of that. And we have a few new buildings and bigger buildings. That cost increased, I think, about 20 to 30% from a year ago. Yeah.
And does that include external maintenance of landscaping and?
Yes. Snow removal and security,
Yeah.
off-duty police.
So thankfully, we are doing a little bit better job on our landscaping, Steve, than we have been in the past.
Well, I was worried desperately about that, John, for your, yeah.
Hey, John and I are on the same page there.
Security wise, Steve, have we had any incidents in the last, I mean, I'm sure in the last year we haven't had anybody in the library, so we probably haven't much, but I think security is still an issue. We got to keep our eyes on it. Is this an increase or kind of holding our own on security at our branch?
Yeah, I'm following Dustin's direction on this, and Dustin's feeling like the number is where it needs to be for that. But yeah, I mean, the grand total number is really being reflected by the fact that we're opening a whole new unit of service. Because we're going to have all three branches in Lee Summit open by the end of this budget year, we're going to have to account for, additional custodial, because that's contracted custodial work, additional landscape work, that's what happens when you take on a new building, there's new expenses.
I get that. What about security?
Security, at this point, Dustin is feeling like we have got things covered. Now, of course, it's really hard. It's like I keep telling everybody, we can't benchmark off of last year because last year we hardly used any off-duty officers.
Right.
We'll use a little more than that this coming year. I'm certain of it. So we'll just continue to follow the direction that Dustin gives us. But this is the big advantage. I mean, 3 years ago, it wouldn't have been the direction that Dustin gives us. It would have been other duties as assigned, and about 5 or 6 of us would have been trying to figure out how many off-duty officers we might need and for how much time. And now it's coordinated and consolidated. And so, I'm feeling very comfortable about where we are in terms of being able to react if we need to change.
So we have security cameras in all of our libraries that somebody at home office can look at pretty regularly and keep monitoring. Is that accurate?
Absolutely, yeah. I mean, all of our branches have interior and exterior security cameras that we use for any number of different purposes. I mean, whenever we have a weather-related closing, I actually access them to monitor whether the parking lots have been plowed yet and things like that, so that we can determine when to open. And we do have interior cameras throughout our libraries as we've been renovating. So that's pretty much all taken care of, and we're always enhancing those, and
Okay,
actually cheaper to do that stuff now.
I have a question when, on that whole security department, Dustin, and all of that. Like, what's going on with that, I guess, office in general?
Right now, the office is comprised of two people. There's Dustin and Jim Shelton. And they are managing the safety and security for the library system. And I should make clear that it's the fact that they are managing these services. They're not executing the services. So they are still relying heavily on third parties for, off-duty officers, things like that.
So
Okay.
we don't have any plans to hire full-time security personnel. We're going to use part-time professionals to help us when needed.
So far, that is our plan right now, but really more to the point, I'm going to yield to what Dustin says. I mean, if Dustin comes to me and says, we really need to be thinking about this, then that's when I'm going to be thinking about it.
Okay.
I guess my other questions are we hiring more people? I mean, is this a position that, I don't think we're putting enough into this, is I guess my point. And I know we're putting a lot into it, but I just, with the way things are in the world today, I just think we're asking an awful lot of a large system like this for two people.
Yeah, well, a good point. And I think that, that
It's not going to get better anytime soon. And there's so many aspects of this, of something like that. I think that you're asking an awful lot of two people to handle that many branches. That's, I guess, what I don't know.
well, I do think, do they have the duty really to recommend to you improvements and changes, and you expect that they will do that if they see that that's a concern that needs to be dealt with. And I can agree that
Correct.
it would seem that way. It would seem like we're going to end up paying more this year for security than perhaps we did in the past, but I guess we don't know that right now. But do we have the flexibility in the budget to do that?
We do, yes.
If we had to.
Right. Yes, we do. We have the flexibility in the budget to do that if we need to. But yeah, I mean, I've made it very clear to Dustin that I want him to talk to me about what he needs and when he needs it and how he needs it. So.
Okay, thank you, Michelle. That's good. That's good input.
Thank you.
Okay, just one quick question about a source of revenue that kind of gets mysterious, and that is the visiting athletes to the state who come in to play baseball, football, whatever.
Right.
And they pay a percentage of the state income tax, and that percentage of the state income tax is designated for libraries. Is that correct? Have I got that right?
Yeah, there's a special income tax that they have to pay, and 10% of what is collected, it goes into a general fund for libraries throughout the state of Missouri.
Okay, and my understanding is that this year we're likely to get more from that fund than we have in the past. Is that?
It's around $45,000 a year.
I'm sorry,
It's around $45,000 a year.
$45,000 a year, but that's not the full 10% of what's collected, is it?
It was last year, but they collected more this year than they did last year. Oh, well, not collected, allocated. They always collect what they need to, but they only allocate what they feel they want to.
So
And
does the law require them to allocate 10% of that to libraries?
they have to allocate 10%, not 10% of what's collected, but 10% of what's appropriated. So yeah, I mean, so if, for example, they say, for example, they collect $1 million, then they would have to allocate 100,000 to libraries. But inevitably, what they've been doing for years is they'll collect $1 million, they'll only appropriate $50,000, which then means libraries will only get 5,000.
And what happens to the other collected money?
Great question. I wish I knew. Nobody in Jefferson City seems to know.
Well, we.
And I asked.
Perhaps we should ask some of our local representatives.
I do, and I do. And the interesting thing is, whenever Jim Staley and I go and lobby in Jeff City, they always ask me if I know where it goes. So basically, my feeling is that this, I mean, it's not getting skimmed. My feeling is it just goes into the general fund. And it just becomes something that they could spend on whatever it is they want to. But that's certainly not the way the law was written. Until this year, this is the first time that they have allocated 100% of what they collected to the cultural partners.
Well, the Secretary of State is kind of our person in the state government. Is that not so?
Yeah.
And so do we ask the Secretary of State to find out for us and explain?
Yeah, I mean, generally, it just goes into the general appropriation, and they just spend it on whatever they want to.
Yeah, but that's, it doesn't seem like that was what was intended.
It's not what it was intended for, but I mean, the enabling legislation says that they may appropriate, not shall appropriate.
Okay.
And so until the law gets changed, that's not going to get changed.
Yeah.
And it has to, and it really does have to be that way because, think back, for example, when the Rams left left St. Louis for Los Angeles, all of a sudden, out-of-state athletes and entertainers tax took a significant hit because there was, all these football games that weren't being played. And so you want to give the government the flexibility to appropriate not based on what the budget is, but based on what they actually collect. But that's not what they've done. So.
All right, thank you.
Right.
I'll leave that one alone. Okay, so we're now at page 28, and we're discussing the reading rocket and other particular things. Any questions or comments about any of that? I know we've discussed reading rocket before, and I think we're moving in the direction of replacing the existing. The budget envision the replacement of the existing vehicle.
Yeah, when we get to Fund 03, there is a line number specifically allocated for that. It's actually on page 49, where we have those funds allocated. What ended up happening, actually, that was in last year's budget, or the current year's budget, I guess I should say. And what ended up happening is that we were in the middle of a pandemic. A lot of people were pointing out to us that it's not exactly a good remedy to try to gather people inside a confined vehicle during a pandemic. And so we kind of slowed down a lot of those processes. But we've ramped them back up again as times have changed. So.
Okay, any other questions on these pages? Okay.
On page 31, I did want to point out, we talked a little bit about cybercrime and our coverage for cybercrime.
Yes.
At the last board meeting. At the top of page 31, you'll actually see what the.
Does that include active shooter training?
Not training, insurance.
Oh.
So in the event that there was an active shooter event, we actually have insurance that comes out and, that helps us with cleanup, helps us with psychological counseling, helps us with all those sorts of.
Do you ever do any kind of lightweight training for that so people know?
Active shooter training every year.
Oh,
We
good.
do it every year.
Important. It's unfortunately.
But
Unfortunately, that's true.
but we talked a little bit about that, about cybercrime. But yeah, cybercrime and active shooter are actually part of the same policy. And you can see that we pay $19,000 for that every year.
Okay, and you all, those of us on the board are happy to see director and officer liability insurance. So that's in place.
Right.
All right, let's look at page 32, and there we begin a series of charts. In the past, the board has been very insistent that these kinds of things be included because it's so much easier for people that are examining the budget to take stock of what's happening if we do as much graphic illustration as we possibly can. So these are examples of this. A question I would have is that we do payroll and benefits, library materials, library operations. That's the same as we did in years past. How do we compare with technology? Is there an equivalent comparison of our technology expenditures with other libraries of our size as this is?
Yeah, people tend to deal with technology expenditures in different ways, which is one of the reasons why we haven't split this out. Because some people only talk about the infrastructure, the hardware. Some people talk about the hardware and software. Some people talk about just the software. So that's the reason why we haven't split that out. But in terms of looking at it, just looking at the way that we currently have things divided, and the last time I looked at some of our technology expenses, we were where we needed to be. We spent more on software, if you will, digital content than some folks. And spend a little bit less on hardware than some folks, but we tend to spend more on content than people.
All right, so the digital content, is that incorporated in the
Library materials.
library materials? Okay. All right, okay, thank you.
But that, I mean, to Charlotte's point, when you were talking a little bit earlier about the amount of money that we spend on materials, you can see that this is one of those numbers that we point to. So when you look at library materials, we're going to allocate 21.4% of our budget to library materials. The national average is 12.9% of the budget to library materials. And the regional average for other libraries sort of here in the greater, sort of in the Midwestern area. So you take out the coast.
This is one of my favorite
It's
bragging points.
13%.
I love to brag on this point. Is that 21.4% of the estimated income, the total budget, or what is that 21.4% of?
Of the estimate,
Of the 98 million? No, of the
of the
60
And the operating fund,
operating funds.
operating fund, okay.
So it'd be of the 56, is that right?
yeah.
56, okay. Plus, there was 56 plus something else brought it up to 61.
Right, it's the debt service. So once we take the debt service out, that's,
Right.
so it's 56.
All right.
Okay, all right, we're looking on page 33, and this is we were discussing this earlier, this is trend of actual tax rate. And so this is where we are at this point. This is the history of that up to this point. And the next page, trend of general fund tax revenues. You can see the trending there over time, at least the pandemic brought that down some, not as much as we thought it might, but it has brought it down some. Trend of general fund expenditures, you can see what's going on there.
Well, I think the important thing there is that expenditures were also down. And again, that was by design. If you remember this time last year, we were trimming the budget to make sure that we were not going to overspend because we didn't know what our revenues were going to be. So.
Yeah, and lo and behold, the revenues held up better than we thought they possibly could, which is a good thing. We're not through with all that, but so far it's been beneficial.
Mm-hmm.
Payroll and benefits, we go into more discussion and description there. Any questions about that? I did have one question, and I think this came from a member to me at some point, but it's about the the rate of pay for part-time individuals, and what is the rate of pay for part-time individuals, or is it individualized by position?
It's a little bit individualized by position because, I mean, not everyone is going to be paid at the same hourly rate. I did just get an email, I think Jennifer is listening because she sent an email message to me about something else that we were talking about. Jennifer, are you on the line?
I'm here.
Okay, so can you respond to that, please?
The 100 and some odd library pages that we have all make the same rate, but the rest of the part-time associates in branches have varying rates of pay on their pay scale. They're on 3 different pay grades, depending on what their levels of responsibility are, from straight customer service to providing programming, technology help, and story time. Their average, that group's average wage currently is right at 15. Just
$15 an hour.
Yeah.
And the pages, what is there?
Theirs is 11. Look at me. It's going up. That's the reason why because we're trying to stay, just ahead of minimum wage. So it's going to $11.50 for 21-22.
The pages are at $11.50, so that's the base rate for pages, or that is the rate for pages. Period.
That's the rate for pages. We currently don't have a differentiating rate for pages for tenure or anything like that.
Okay, thank you. Staff development. I don't have any questions on page 36, 37. Employee resources. Retirement plan. I think everybody's familiar with the retirement system that we have, and it's a wonderful benefit for our employees, and it's one that we proudly carry. Fortunately, it's with the state, and the state has done an outstanding job of, or it's not with the state per se, but it's a separate organization that has done an incredible job of management that has enabled us to escape the problem that many governments are having with overly rich and underfunded pension systems. That is not the case with the pension system that serves our employees. And we're very proud of that. And it does cost money to make it sufficient. Too many governmental agencies have not paid the money that was necessary to make it sufficient. And so there's some problem that you hear about nationally. That problem does not affect our Kansas Mid-Continent Public Library or its employees.
Right. Just the number itself, which is actually on page 35, is that the Missouri Loggers is pre-funded at 95.5%.
Yeah, which is
meaning that if for some reason, the General Assembly decided we're going to liquidate this, we're going to do away with it, everybody would get 95 cents on the dollar for their plan, which is outstanding. I mean, you don't want your pension, frankly, you don't want your pension funded at 100% or more because, you want to be able to work the markets and to do all of those things. So 95% is, I would argue, more than fully funded.
Michelle is more than an expert on that.
She is. Michelle and Joycelyn both have been our loggers.
Loggers is like my favorite thing. I love that thing. I mean, that's like the best organization. It's such an eye opener because it's such an eye opener. It's amazing.
And I've been the employee rep for loggers for our employees before, and it's a great run organization. I go down and help them with legislative education from time to time, and the other thing is that you read in the newspaper, you'll read about capers or some of these other programs and yeah, it's night and day, apples and oranges, not even close to the same. So.
I think it's also important, this is Jennifer, I'm going to jump in here real quick, to note that something like 92% of the retirement benefits that are paid out from loggers stay in Missouri. They stay in the local area. So it's like a reinvestment expense really, because when it does get paid out, it's staying local.
It's not what you think of. You think of people retiring and then just immediately heading off for Arizona or Florida or Texas. But
John Knox Village.
or John Knox Village. No, but what ends up happening with loggers employees for some reason, loggers retirees, is over 90% of them stay here in Missouri. So that money that Mid-Continent is paying for our retirees tends to go back into the Missouri economy, which is a good thing.
Who's our representative now to loggers?
Well, you all
Representative?
are the employer representative.
Board representative.
That's Michelle. Are you still the board representative?
And between Joycelyn and myself.
Yeah, it tends to bounce between the two of them. And then employee Jennifer is a member of the legislative committee for loggers and frequently gets elected as employee representative. So.
Well,
I got voted in so many years that I think we just all, like, if I wasn't there, like, I was voted in. And then I got to the point where I was sad when I couldn't go, and I kind of passed it to Joycelyn, but I may have to try to take it back.
Well, we appreciate it, Michelle. You were the representative when we, got into some difficulty budgeting several years ago regarding trying to get our percentage up to where it should be. And you were extremely helpful in explaining to the board why that was important and necessary. So we do appreciate your work there. And I'm serious that she is an expert on it. She's the board expert on that, along with Joycelyn. So thank you again. Technology and capital improvements. That's where I am. I don't know where anybody else is, but I'm right there. How about that? 42? Page 42, technology.
John, I'm going to make you go back to 39. I'm sorry about this. This is the one that's really important. This is the meat of the meat and potatoes. This is what Mid-Continent Public Library does, is we provide materials and provide information for people. And this is where you can begin to see, when you really start breaking stuff down, how we allocate our funds. And again, remember, 22% of our budget is what goes to collections. But you can see in terms of print, right now we rank 6th in the nation amongst 47 library districts, large library districts in terms of the fund allocation. 3rd in terms of audiovisual materials. In terms of electronic books, we rank 8th. And when you go to the page 40, you can see we rank 1st in terms of licensing for digital materials. So and those numbers tend to fluctuate because a lot of the city and county libraries, sometimes they'll get an influx of funds for one reason or another. But yeah, when you look at us overall, we always tend to be amongst the top in the nation.
And these are available in our virtual branch.
Mm-hmm. Right.
We need to put that in here somewhere so people can know that.
Yeah, the more we can say about the virtual branch, the more we can, I guess, advertise it, the better off we are, I think. People need to use it.
But you can see
Is there any reason not to advertise it?
No, I mean,
Is there any strategy involved where we don't want to?
Lots of strategy. We advertise it all the time. But yeah, when you see on 41, this actually is the rolling total of our library's materials budget and expenditures, 23, 21, 21, 21, 21%. And the thing that is important on all of this, actually, there was just a conversation not too long ago amongst Missouri public library directors. They were asking what the allocation was. And I remember St. Louis County wrote back and I think they said 12%. Springfield Green was trying to get to 12%. So yeah, it's not even close. So sorry,
Steve,
I just wanted to go back. That's just really important because that's when people pay their library taxes, that's what they think they're paying for. They're buying books. These are the pages that tells you, how much we spend on books.
Steve Rowling.
Yeah, I want to go back to page 38. Um, I know we put some money, we had some extra money this year, and we put some money in to do a study. How are we doing it? 3 or 4 years ago, we were behind in our payroll in comparison. I think we made some adjustments over the last few years. How are
Yeah,
we
you
doing?
mean getting closer, getting up to the 50 percentile,
Right.
and over. That's been a long-term goal. So good question.
Yeah, and you can really see that on page 38. So you can see that there's that gradual increase, and that gradual increase that happens between 17, 18, and then to 19, 20, in large part was due to catching up from the Great Recession from
Right.
2008 to 2010.
Right.
And then it's a little bit of a level off, and that level off is pandemic because of the hiring freezes. And then you can see us beginning to pick back up again. In terms of the salary study, Jennifer is just getting started on this, but she and we're working on another project, and we had an opportunity to take a look at some of our compensation. And Jennifer, do you have anything you want to say about just sort of what you know off the top of your head in terms of comp ratios and things like that?
I think in general that since we started the work that to make up ground in 2016, I feel confident in the ground that we've made up. But it's important that we find out for sure, or at least make sure. So that's what we'll be working on this year. But we have made some significant strides in correcting, what we were unable to do for several years due to, the recession and uncertainty. So, yeah, I suspect we're going to see, some movement. We also are paying attention to some other types of pay audits, like internal equity pay audits, to make sure we're where we're at in terms of demographics and equity based on race, gender, education level, et cetera. So those are all things that are being looked at as well. So I'm confident about where we're at based on where we were, but also know that there's more work to do.
I remember when I first came on the board several years ago, it might have been more than one gentleman, but it was one guy who came quite often complaining about our salary structure, primarily for his wife, I think, if I recall correctly, and threatening organizing unions, et cetera, et cetera. Is that still in play or not?
I think that it could potentially always be in play. But again, I'm hoping that, we've made some strides and are, committed to continue making strides. We don't want to get behind in order to, attract and retain good staff. And we want to make sure that we're paying attention to what the market is doing. And also making sure that we are communicating about our total rewards and total compensation.
Yes.
So it's important to note, it's important to note how good of a benefits package we offer alongside our wages and salaries. So.
Thank you.
One more thing, since we're still on this page that Steve was pointing out. I mentioned this earlier when we were talking about the different types of program that we offer earlier, that, there's two different ways to look at the budget, and here's one way and line items another way. This was that pie chart that I was referring to. So if you look at payroll and benefits allocation by program, so you can see 36% of our payroll allocation is for material lending. In other words, our staff that help people check out books. And 33% is our programming and information services, 16% public technology. And when you get up there at the top, where it says 16.7% for public, for support services, this is the one that's what includes me and Quan and Jennifer and our delivery drivers. So again, where the rubber meets the road, where we're providing services, 36%, 33%, 16%, and where we're supporting those, your superintendents, if you will, 16%. So we are not a top-heavy organization, which is not every taxing jurisdiction.
Phasing, actually.
And I'll be honest, it's actually increased. It used to be even more shallow than that, but the problem is that we had a real issue with span of control at that point. So this actually helps to ensure that we're able to serve people and do what we need to do, but it's still, I believe, in the right ratio.
Okay, let's hop over to page 40. I believe I just want to call attention to the Career Online High School. I think this is not particularly well known, but what an incredible program that is. And that's still strong and still ongoing, Steve?
Yes, and one of the things that actually it's going to become more well known, the state of Missouri is actually going to be buying a platform for this for every library in Missouri to participate. So
okay, that's great, because this is an opportunity for people that didn't get their degree,
high school diplomas,
to get it, and to get it in a way working with their local library, and that's tremendously important.
Yeah, it's a certified high school diploma with career training.
Yeah.
Uh-huh.
So that, I've always felt that was one of a major program of ours that wasn't as well known as it might be, but is extremely valuable to the community. Okay, library materials expenditures, I think we kind of reviewed that. Okay, technology and capital improvement. I don't know that there's any, I think we got a pretty full report last meeting about that from Brian and others. And so I think we kind of know where we are there. The cybersecurity thing, I don't know that we have a separate line for that anywhere. I think that's pervasive throughout our entire technology system. But I hope that this budget is handling cybersecurity sufficiently.
Yeah, I would say it is. I mean, between the two things, when you're dealing with diversity, equity, and inclusion, they always say that, you look at everything in your organization through a DEI lens. And I would say that's true of our technology as well, that we look at all of our technology sort of through a cybersecurity and through a security lens, and making sure that everything that we're doing, while we're providing great services for people, we're not opening up holes in the firewall and not exposing the library system. So
yeah, we definitely have that, and I do want to talk about one other thing just very quickly, Steve. Part of the budget here, it's not itemized or anything, but we do have a whole, we call it a website committee, virtual branch committee, that their goal is to provide the ease of access and navigation for the website. But there's also a larger kind of marketing strategy, if you will, around marketing the services that we have with the website and through other means. We have quarterly meetings with a lot of the departments that provide services for the library, either through the virtual branch or through programming or other means, about getting their message out. So we do have a fairly comprehensive plan for marketing our virtual branch and the services provided through it. So I just want to let everybody know that.
Is there a feedback link online where we can?
Yeah, there is. We do surveys that pop up randomly. There's 2 or 3 different ways you can provide feedback. There's a little talk to us links at the bottom of every page. So yeah, there's quite a few different ways to provide feedback through the website. And on the online catalog also, it's also present over there. And even our Bibliocommons, the people who provides our catalog, looks at all that feedback to help make their product better also for the catalog. So,
yeah, one area that I find where there seems to be not enough knowledge of what we offer technologically, and that is among the teaching staff of local school districts. I think probably at the superintendent level, maybe at the principal level, I'm not sure, but there seems to be a good knowledge of what we have to offer. At the teaching level, somehow or another, that seems to me it doesn't get down there as much as it should. Yeah, you know, one classic example is the homework assistance, which is invaluable. And there are teachers that are using it. There are so many other teachers that don't appear to know anything about it. And I don't know, how we could improve that, how we can reach those teachers directly with that information if they're not getting it through their principal. But that's an ongoing issue. And I think, I hope that we're addressing that, and I hope the budget provides sufficient support for that.
So that's a hard group to get into, John. We have 21 school districts in our footprint, and the branches lead the charge on getting into their individual school districts. So in some cases, yes, they work directly with the teachers, and they do, in some places they have to work with the media specialists at the school district. And so it's how the school district handles those things coming in. So you're right, that it's kind of a struggle to get in there and get the word out on those. But I know the branches work really hard on getting that word out as much as they can. So.
Okay, well, that's good to know, but I still think that somehow or another, we ought to find a way. Maybe there are other libraries around the country that face this same problem, and they might have found ways to get directly to the teachers. Maybe I don't know what that violates in terms of our relationships with the school districts, but it seems to me that every school district ought to know precisely what it is that we have to offer to help their teachers do their jobs, and that there ought not to be any barrier to that. And
Right.
It seems like we ought to be able to talk directly to the teachers themselves, so that they're aware.
Don't disagree with you there at all, John. So.
Yeah.
There are probably two things that I'd want to hop on in terms of our little bit more information on this. One thing is, and I always have to ask Susan, but I think Brian actually knows this too. I think we are up to 18 school districts where we have MOUs in place where students automatically get Mid-Continent Library accounts that give them access to all of the content just based on their school enrollment. So kids don't have to come in and do anything to get access to our online content. They just get it automatically. Is it 18, Brian? Is that about right? Of our 21?
Yeah, I think you're pretty close. Yep.
Yeah, 17, 18, something like that.
Yeah, I'm counting them now, so yeah.
And so one of the ways that we looked at addressing this is although it's important to deal with it's almost like a supply side argument, where what we did is we went in and we started working with the kids, making sure the kids have all the access, and then we'll double back to the teachers. And a lot of that strategy was due to occur this last school year when everybody was remote. Now, in some ways you'd say, well, that's perfect. They're remote, so they'll be able to get access to the collection. But the problem is this was the year where we were going to be, working with the teachers to get them oriented with everything. And we really couldn't do that, and all the chaos of the remote learning and all of that. So we're doubling back to that strategy, the youth services side. So,
John, I'm going to have to leave.
Okay,
could I ask
I'm
a
sorry.
question before
Yeah.
I leave?
Go ahead.
I'm sorry. I apologize for interrupting the train of thought.
That's all right. Go ahead, Steve.
On page 58, Steve,
58.
we talk about kind of our statistical data, and the last line shows that we've had a significant drop in materials circulated and number of registered borrowers. I'm sure that's pandemic, but
it's
I
pandemic,
think
yeah.
I'm guessing we ought to do a footnote to explain that, because if you don't, I mean, it looks like we've taken a dive, and we have, but we need to explain it, I think.
Yeah, we can do that. And you're absolutely right. It was, and when we put in our 2021 numbers next year, it's going to be significantly lower too, because it's the other half of the pandemic. So.
Right.
Yeah.
I think, people understand, but we just need to tell the story so that somebody doesn't look at it and they go, whoa.
Steve, they understand this year, when we get up 5-6 years from now, people will kind of forget.
Right.
And they'll wonder what happened. So, yeah.
Well, overall, John and Steve and the committee, I'm totally impressed. And the level of detail, the level of specificity is just remarkable. And every year I'm more impressed than the previous year of the quality of work Quan and his team and Steve and his entire team does. And this is the budget we should all be proud of. So congratulations to all.
Thank you, Steve. I'm sorry we went on long. It just usually this first time takes longer.
Yes.
The next time we see this budget, we will, have a lot less questions, hopefully, and we can do it in a much shorter period of time. But I think it is important that we go through this
I agree.
meticulously. So
I agree.
thank you very much.
You need my vote before I get off?
No, we're not going to take any votes. This
Okay.
is just a review completely.
Okay.
And we'll take votes on June the 3rd.
Mm-hmm. Right.
Thanks, everybody.
Okay, thank you. Capital project, I'm just kind of.
Yeah, that's okay.
But the capital project fund, I think that's terribly important. This whole thing and all the work that's been done and the work that's yet to come. We still have some 35 or 40 million in work yet to be completed, do we not?
Yeah, that's about right.
And that's reflected in our carryover balance on the capital fund. One question I have relates to the debt service. I note that the debt service goes on until 2039. If we want it to go on that long, we have the obligation to retire the debt for sure. Do we have the opportunity to retire it earlier if we choose?
Yes, on page 51. I'm sorry, I just kind of highlighted that year.
Okay.
Right in the middle, June 30, 2026.
Yes. Yeah, it's highlighted in gold.
No, it's bolded where.
Oh.
I'm sorry, the highlighted one is the new fiscal year, and the bolded one is the early payoff year.
Yeah, so 2026 is when that's when everything after that is callable. So we can pay off anytime after 2026. But we really can't call or refinance before then.
Is there any estimate on how fast we can pay this off if we really put our mind to it? Like, has there anybody thought about like just going ahead and chugging it down to like maybe 2030, 2032? Is that a possibility? Just getting the thing done?
Well, that was the question, and I don't think that we know that yet. But as we get closer,
If we have more money coming in, we can certainly pay the thing down, because that's a huge deal, because you never know, it could dry up tomorrow. We're sitting pretty now. We need to pay it down.
Right. Well, I think, and I think it's up to the board to make those wishes known if those are the wishes of the board. I think we've discussed that previously. We've never taken any vote on it, but I think the general tenor of the board has always been, let's pay it off as soon as we can. Let's carry that.
Depends on the future interest rate.
Yes. There's a lot of detail.
That would make sense awfully.
Right.
Bringing this out may not be a good idea. Just having control over the debt would be a very good idea.
Yeah.
But it is a multi-part question. I mean, it's not an easy binary question.
Right.
So for instance, I have a project, Quan and I do this every year, where basically we look at what we call our 25-year financial projection, which, it's 25 years. So once you get out beyond 3 years, really you're guessing. But the point of the matter is that it basically allows us to look at when we took out our debt, all the way through to when we retire our debt. And what sort of choices do we need to make? If we're going to assume that, that personnel costs are going to go up by a certain amount and material costs are going to go up by a certain amount, overhead's going to go up, that our revenue is going to go up by a small amount. Usually, we're only looking at 1.5%, 2% for revenue increases, for example. If you consider all that, and then also you consider that once we get about 5 years from now, we're going to have to start reinvesting in our buildings because you have to start maintaining all of the buildings that we just updated. And so for instance, when you look at the 25-year plan, you start seeing I want to say it's about 4 years from now, we start allocating funds out of operating to go straight into the capital projects fund to do things like repairing the parking lots and repairing the roofs and things like that. We easily could take that $1 or $2 million to use it to pay down the debt, but we'd be paying down the
Can't do
debt
both.
and have leaky roofs.
Can't do both.
Not at this point.
We need more money.
We need more money. And again, so that gets to the point that, taking voluntary rollbacks and decreasing our revenue.
That's what I'm saying.
Is not going to help us.
That's what I'm saying. That's a really good argument for telling people we need more money to pay the debt down as soon as possible. I
Sure.
think it's a good way to,
That
to the
Yeah.
public.
that is another good way it's a good argument for doing that.
Yes, it's the best I can
And I
think.
think it's useful to know that behind all of this is this 25-year plan, which is guesswork.
It is guesswork.
Can you imagine any business developing a 25?
Can you imagine 25-year plan 4 years ago before COVID? Nobody could do that.
Right.
So basically, we need to
I
pay
know.
the debt down. You don't know what's going to happen next.
Correct, but it nevertheless, it helps every business or every government to do that exercise of looking in the future and trying to balance out things as best they can, knowing that it's at best just a guess, but at least it's a guess that gives you some structure as you go forward. And that's what we did years ago before
Right.
before Proposition L was even thought of.
Yeah. Well, and this is the Michelle, I always like to attribute this to Michelle, is that she talks to me about how school districts will do things like build the buildings, and then they'll come back to you in 18 months and say, okay, now we built the buildings, but now we don't have enough money to put furniture in the buildings, and so we need to raise taxes again. That's not what we wanted to do. We wanted to show if you agree with our vision and agree to increase the levy, we see a path where we're not going to have to come to you again for another 25 years. Now, again, it's guesswork. It is guesswork after a certain amount of time, but that's certainly what the plan shows.
Yeah.
So,
Okay,
paying off the debt and maintaining, we can do it. So.
okay, are there any other, I think we need to kind of call this to a halt. We've gone
It's-
on for 2 hours and I appreciate it.
John, there is one thing that I definitely want to show people. I want to highlight this on page 49, the very, very last line where it says, this total project amount is $114,700,000. And if you look over on the previous page, it says total funding $113.2 million. This may be a little bit of a head scratcher because it looks like the budget's gone up. That's not what's happened. What's ended up happening is this $114.7 million is inclusive of the non-cash purchase of the Green Hills property where we're putting our new branch. So we've done some asset swapping and we've gotten value that we have to account for somewhere.
My business ladies ask me about this branch.
Yeah.
Every week, and I say to them, well, we think we have the land, but I'm not sure because it's a secret. I need to have something to tell them.
Yeah, I mean, we are doing everything in our power to close this thing yesterday because we need to get working on it. But yeah, I mean, if you look at it, it's saying right here that it's 114 on one page and 113 on the previous page. The reason there's a difference is because of that non-cash value of,
When do you think we'll wrap up the purchase or the acquisition?
hopefully by the end of the month or
A month
right at the
or two?
beginning of June.
Okay.
In fact, we've actually started working on a temporary construction easement so that we can even start working on it before.
And he's not giving you complete access to the title of it or?
We're pushing we're pushing hard and we're doing everything we can to finish it
Hold
up.
on to that question for our next meeting because maybe.
The last time we had a meeting, there were questions you weren't supposed to ask, so I wasn't sure if we should start on that now or not.
No, but we can, we're continuing to work on Green Hills, so.
Okay.
But yeah, I'm sorry, that's the one thing I wanted to make sure that I got out because it's different. And I want you to be able to explain it if somebody did ask a question about that.
Yes.
So,
Okay, well, there are a number of other items to discuss. Are there any ones that are just really?
No.
John, if you don't mind, you can take a look at page 56. That's the self-funded health insurance fund. Just take a.
Yes.
Yeah.
Yeah, is everyone familiar with that? This is our self-insurance. This was a fairly controversial thing when we undertook this. And several of us, including me, were a little skeptical about whether this would work out to our advantage. It's turned out to be an excellent way of handling our insurance. And my congratulations to the staff for proposing this in the beginning and for our consultants who worked with us on this because it has worked out. Now, that doesn't mean it's going to work out every year. We don't know exactly what's going to happen from year to year, but we know we're going into this coming year with a substantial cushion and balance that will help us. I'm sure COVID has had some impact on this year's.
Not really.
Not really?
Not really, yeah.
Yeah. Well, I'm thinking about the opposite from maybe where you are. A lot of people have not made medical expenditures this year.
Had less
They ought to
expenses,
have
right,
made,
right.
And they will now need to make them for various diagnostic tests and so on. So, it's good to know that we have a cushion because I expect to see those rates, the usage go up this coming year significantly.
Yes, also we have a policy about a fund balance, the minimum and the maximum. So we want to make the ending fund balance stay in between.
Right.
Is that policy working out well? Is it matching the reality of what we do?
Yes, if you don't mind, you can look at the footnote on the page 56. It shows the calculated minimum and maximum and the projected funding ending fund balance.
Right in the middle.
We may have a deficit for next year, but that would make the ending fund balance stay in between.
Okay.
Charlotte, would you just sort of guide this toward the conclusion?
So to the comment, so if you look at estimate for the estimate for 2021, which is the current year, our ending fund balance is $1.5 million, but the maximum is 1.53. So we had to get under that amount, which is why when you go to the right-hand column, it says when you go to expenditures, it's showing a deficit of 465 million. That is because we're actually overfunded. And so we need to get it down a little bit.
So that's transferring that money to the next year?
No, it's not actually transferring. It's actually spending it.
The funding.
Okay.
Yeah, we actually use the funding. And so then the ending fund balance is $1.1 million, which is right between the minimum and maximum.
Right.
It doesn't, and keeping in mind that the balance, as you can see, the balance is based on our incurred but not spent and 3 months of claims. That's our minimum. And then our maximum is 6 months of claims. So, I mean, if
Like a greased wheel, looks like it's working well.
we had a really, really bad year, I mean, we've got a balance so that we can use to.
Yeah, good plan.
And then the remaining items here on the page are really just supplemental. There's some peer statistics here where we're talking about, how we compare to other library systems. And then what Steve was talking about in terms of some of our basic statistics that we have. We, incidentally, our service population of 762,000, that'll probably be over 800,000
Wow.
once we get all the census data in.
This year?
Yeah.
Do we need are we done?
I
Looks good.
think so, unless you've got any other
Oh,
questions.
do we need a motion to adjourn?
Probably so.
Is there a motion to adjourn?
Not sure if there's anybody left except for you and John, though.
I'll make the motion then.
And then we can adjourn by acclamation.
Acclamation. Thank you very much.